this video, I'll show you what to do when you receive a trade alert on the Discord channel. I know there has been a lot of confusion about how to get into a trade when you get the alert. Maybe you saw it 1 hour later, and is that a good time to get into the trade? So let me just walk you through the common questions that you may have about the alert. So this is the typical trade alert that you will see on the Discord channel, and many things are pretty obvious about it. The symbol is BKNG in this case. Expiration date is 15th May. So let's say you got this alert, symbol BKNG, expiration 15th May. Let's go to Thinkorswim and start putting on a trade here. So this is Thinkorswim. So first thing you need to do is go to the trade tab, type BKNG. In this case I have already done that. Then find the expiration date, 15th May. Let's locate that, 15th May. So expand the expiration cycle. Now I'm already only seeing 4 strikes, so let's change it to maybe 12 strikes so you can see more stuff here. Okay, so now this trade says buy a 1200 to 1210 bull call spread. So when I sent this alert, at that time BKNG's price was around $1,200, so that's why I sent this alert. And as you may or may not know, I usually try to trade at the money, buy at the money debit spreads. So if the price of BKNG is 1200, I'll try to buy a 1200 1210 bull call spread. Or if possible, sometimes I'll even do this. So price is 1200, I may go 1 strike in the money, so I'll buy a 1195 call, and then I'll sell 1 call out of the money. So I might sell 1205 call. So instead of 1200 1210, it will be 1195 1205. Irrespective of the nuances of the strike prices, it doesn't matter that much. Like you could buy 1195 excuse me, 1195 1205 bull call spread. You could buy 1205 1215 bull call spread. Yes, the strike prices are different than what I put on, but it doesn't matter that much, because in the bigger picture, just remember that what we are trying to do here is, let me go to the charts real quick. We are trying to trade price extremes. So again, markets are in a really bad condition right now, but my philosophy doesn't change. So in fact, I'll give you example. So this is 319. On this date, I sent out the alert saying that buy at 1200 1210 bull call spread. When I sent the alert, just notice as I move around this pen, on the right side is the price. So the price of BKNG was 1200. I'll stop there. So it was 1200. Now during that day, there was a lot of fluctuation in BKNG's price. I personally bought it at 1200, and if you notice my trade, what I'll also do is, now let's get down to here, but this part. So when I send you an alert, I will also send you alternate trades. What do I mean by that? So what I mean is, since a price of an equity moves up and down during the day, maybe I sent you the alert when BKNG was 1200, but by the time you got the alert, or maybe by the time you got the alert and you had time to open up your computer, or the price has gone somewhere else. So I will usually send you other options. So let's say the BKNG price dropped from 1200 to 1195 by the time you saw it. Well, great, you'll actually get a better fill than I did. So in that case, I'll just buy 1195 1205 bull call spread. So you're in a better position than I am. Maybe the stock price went up, so by the time you saw it, the price was at 1210. Then buy 1205 and 1215 bull call spread. So I always actually mention alternate trades when I put out a trade alert. Now let's go back to this chart again. So just look at this candle on this day. So BKNG, when I sent out the alert, it was 1200. It went all the way down to 1150 that day, and then it went all the way up to 1235. So that was a trading range. That's a huge trading range. The reason being the markets are really volatile right now. That's one reason, and the other reason is this is a really high price equity, so it does move around that much. So if you get the alert, and by the time you got the alert and you had a chance to put on a trade, the if the price has gone down, in this case, look, in the alternate trades I've mentioned only two trades. If the price goes down, then do this. Price goes up, then do this. What I want to mention here is, if the price goes down from the price that I mentioned, 1200, you can buy it at any price if it's down. So if it was, let's say I put out the alert at 1200, if the price goes down to 1155 and you got the alert at that time, well, that's great. That's a win-win for you. So don't put on the exact trade that I have sent out. If the price is down, buy an at the money call spread at that price. So again, going back to this example, let's say you got the alert and it was trading at the low of the day, 1150. So what trade would you put on at that point? You obviously would not want to buy 1195 1205 bull call spread. That's meaningless. So what you should do is, if it's a 1150, buy 1150 1160 bull call spread. So buy the 1150 call, sell the 1160 call. So just use your judgment. If the equities price is lower than what I alerted you, because I also mention here, if you notice, I always mention price at time of trade. So when I put on the trade, the equities price was 1203. If it's lower than 1203, just buy the at the money call spread for whatever price the equity is at. So that takes care of that part. Because if it's below that, you are always getting a better fill than I am. So no brainer there. Now the other question is, let's go back to the same day. This BKNG traded up all the way up to 1235 that day. So now the question is, when I sent out the alert, the price was 1203. What if by the time you got the alert, the price was 1235? Would you want to put on a trade? So in this case, what I recommend is, I always follow this rule. Never chase a stock. If you chase a stock, you will end up losing. So if this is the trade I put on, you saw the alert and you pulled up BKNG, it was trading at 1235. Look at my alternate trades. Have I mentioned a trade for 1235? No. So the only trade I've mentioned is, okay, maybe from 1203, if it goes to 1210, then fine, you can still get in at 1205, 1215 bull call spread. But if it's above this price that I've mentioned, then just ignore it. You will always get an opportunity. Opportunities are everywhere in the stock market. Maybe not today, you'll get an opportunity tomorrow. So do not chase the stock price if it's not within my parameters. If it's below the price that I got in, then yeah, sure, get in with whatever price you have. So that clarifies that confusion. Now let's go back to this alert. So I've mentioned buy a 1200 1210 bull call spread. So there is a video that I have in the learning center where I've mentioned how to put on trades, but let me show you anyway. So it's a 1200 1210 bull call spread. What that means is, buy a 1200 call, sell a 1210 call. So let's go to the trade tab, locate the 1200 call, and this is Thinkorswim specific. Right click on the ask column, because you always buy at ask, you sell at bid. then click buy, then go all the way to vertical. It will pull up this order entry screen for you. Just make sure the strikes line up with what I've alerted you. So in this case, it's a vertical spread. If it's green, that means you're buying it, because green color means you're paying money to buy it. So there is a buy side and there's a sell side. You're buying one strike, selling one lot, selling one lot or contract. Symbol is BKNG. Expiration date is what I've alerted about. You're selling at 1200 call, that's the strike, and you're buying at 1200 call plus, and it says buy here too, and then you're selling a 1210 call minus, and then also says sell. Strike type is call, and then it shows you the amount of price you'll be paying, the debit, to buy this trade. Now change it to GTC or day, however you want. We can leave it at day, doesn't matter. If it doesn't get filled that day, we can always put on another trade. So confirm and send, and then it shows you maximum profit 465, maximum loss 535. All looks good, so just click send, and that should take care of this trade. Now let's quickly switch over to Tastyworks and show you how to put on the same trade in Tastyworks. So I have Tastyworks open here. Let me go to the trade tab, type BKNG, and then go to strategies, go to long call vertical, and click go. Now you just need to make sure that the expiration and the strike prices match up what I've alerted. So in this case, it pulled up some defaults. It's saying buy 1170 call, 1190 call. The price I alerted you was 12. Let me drag this buy to 1200 call. It's 1200. Oops. And then the sell part, let's switch it to 1210. So that is the structure. 1200 call you're buying, 1210 call you're selling. Only problem is it says 14 days to expiration. That wasn't the case. We need to switch to May. So you can just go to this section, expirations, and click on plus time, and that'll keep changing the expiration date. So in our case, the 15th May was 56 days. So let's go 28 days, 35 days, 42 days, 56 days. So now it matches up. We are buying the 1200 call, we are selling the 1210 call, 56 days to expiration, and then it shows you the debit price here, 480 debit. Review and send, and that brings you to the summary screen, which shows you the structure of the trade, the net debit, and also shows you another summary here. Maximum profit you can make 520, loss 480. So once you have that, click send order, and you're good to go. Now so yeah, that's it. That's how you put on a trade, and that's how you deal with the alerts that I sent you. And one more thing I want to point out is that I'll always when you start with the challenge, you're starting with $2,500. So the maximum risk I will take at any point is 30% of my portfolio. So what happens is, let's take the example of the alerts that I sent out in the last 2 days. So I sent out an alert on Apple, BKNG, RUT. Now if you get filled on let's say the first 2 trades, and you have already used up $750, which is 30% of your portfolio, please ignore all other trade alerts that I sent you. Because the reason I'm sending the other alerts is sometimes what happens is some people may not be able to put on the trades that I publish, and the stock price has gone gone beyond their reach. So to make sure that they get in, I may be putting out other trade alerts. But just remember the simple rule: if you have used up 30% of your portfolio at that time, then ignore the newer trades that I'm alerting about. So yeah, that's it for this session. Please make sure to watch the other videos that I have out there, which go into detail about how to put on trades and debit spreads and all that stuff.